The cryptocurrency industry has been rattled in recent weeks by the dramatic fall of the Terra network, which occurred as a result of the depegging of its algorithmic stablecoin, USD. As Luna fell to 1 cent, many investors lost everything. Because they are both a component of Terra's blockchain, Terra Luna and the USD stablecoin go hand in hand. Terra's biosphere relies heavily on USD. So, what happened to Terra Luna? And what made Luna crash? Hello and welcome back to Crypto Cash Channel. In today's video, you will learn all about Terra Luna's crash, what caused the crash, and whether or not it will ever recover. But, first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. The sudden crypto asset losses sent shockwaves reverberating through the whole crypto sector. The crypto market is in a state of disarray right now. However, it's nothing new for cryptocurrency investors. When the economy is in turmoil, this particular asset class tends to be highly volatile. But the most devastating crash was the one experienced by the Luna cryptocurrency and its TerraUSD stablecoin. You may not be familiar with the word stablecoin, but it's still crucial. The coin's value has dropped from $118 in April to less than a tenth of a penny as of Friday, making it essentially worthless. Its current market valuation, according to CoinMarketCap, is $863 million, down from a peak of approximately $40 billion. For the crypto markets, Fortis Digital co-founder Mike Burrows dubbed the current state of affairs historic. To put it another way, this is a turning point in the cryptocurrency industry. To understand the Terra Luna crash, you must first understand what a stablecoin is. So, what is it? Basically, it's an altcoin that is linked to a more stable currency, such as the dollar. Like other stablecoins, Tether and USDC are two of the most popular stablecoins. For example, if you have 1,000 USDC tokens, you can exchange them at any time for US dollars. Stablecoins, one of the decentralized finance components, can protect cryptocurrency investors from market volatility. Because Ether is currently worth $1,782, a trader may exchange 1 Ether for 1782 USDC tokens. Investors prefer stablecoins like Tether and USDC. But unlike Tether and USDC, TerraUSD is distinct in a number of ways. Instead of using real US money to back USD, there were a variety of innovative methods and a Bitcoin reserve of roughly $1 billion that allowed the USD's currency peg to be maintained without using actual US dollars. Do Kwon founded the Luna Foundation Guard to protect the peg. The LFG would sell its Bitcoin holdings and use the proceeds to acquire USD if it went below $1. On the other side, it's probable that any profits they generate from the sale of their USD will go toward purchasing more Bitcoin in the event that the price increases beyond $1. But first, how does the Terra Luna work? It's a blockchain like Ethereum and Bitcoin. As with Ethereum's native coins, Luna is native to Terra's blockchain. It was trading at $85 before the devaluation. You could have exchanged 1 Luna token for $85 weeks ago, and the Luna token would have been burned as a result. This deflationary strategy assured Luna's long-term growth. Simply put, as more people trade USD, the more they burn Luna, and the value of Luna rises. The inventors of the Anchor protocol lured traders by providing a 19.5% yield on staking, which is practically crypto terminology for collecting 19.5% interest on a loan. According to the UST's offer, you may earn nearly 20% on your savings if you keep them in USD rather than a bank. More than $14 billion, or 70% of UST's circulating money, was liquidated in one of the biggest deceptions in the history of cryptocurrencies. So, what went wrong? Well, at the time of this video, USD is no longer in Binance. This may be largely due to the name change currently ongoing. Before that, the Terra Luna crash started on the 5th of May, as you may recall. As a result of UST's removal from the Anchor protocol to the tune of about $2 billion, a major chunk of that value was immediately sold. Whether this was a reaction to a particularly chaotic period or a more planned attack on Terra's system is an unanswered topic. Consequently, the price dropped by 91 cents. As a result of arbitrage, traders sought to liquidate their Luna holdings but hit a brick wall. Only $100 million can be burnt in a day. Because of the market conditions, investors hurried to dump their stablecoins when the coin lost its peg. As of making this video, the currency is almost worthless. It was valued at more than $18 billion just a month ago. Binance, one of the most popular cryptocurrency exchanges, had one of its worst meltdowns because of Luna and TerraUSD, leading to a halt in trading of the tokens, which went on for several days. Due to the rapid devaluation of Luna and USD tokens on the exchange, trading of the tokens was suspended for a while. It came after the exchange yanked its support for trading Luna futures contracts earlier and after Terraform Labs increased the Luna token supply to over 6.5 trillion, up from 386 million days ago, in an attempt to push its sister token to regain its one-to-one peg to the dollar. At least 12 other exchanges, including FTX and Crypto.com, have taken action in the previous days as a result of the issue. As a workaround, Terraform Labs claimed that it has temporarily halted Terra's blockchain and is working to reconstruct it. Terra's blockchain was stopped for the second time in a week. To protect the network from any type of vulnerability, Terraform Labs turned it down for reconstruction. Numerous Luna were generated as a result of flaws in Terra's protocol architecture. As a result, there were no withdrawals or deposits made to or from any exchange. Because people noticed the large numbers of newly minted Luna floating around the exchanges, the price fell substantially lower once deposits were allowed. So, will Luna make a full recovery? Even if the market does recover, the future for Terra Luna remains uncertain. However, $USD developers have a recovery strategy. Numerous teams are hard at work developing industry-defining applications inside the Terra ecosystem. Analysts say Luna needs to deal with the matter and show that a collapse of this scale will never happen again. So, we may expect prices to rise again when the Terra project proves that similar challenges will not recur in the future. Terraform Labs founder Do Kwon has proposed a new chain to replace the Terra network and prevent it from utter collapse. Luna 1.0 will be phased out in favor of Luna 2.0. To put it another way, it will cut ties with the USD stablecoin, which was responsible for the first crash. The Terra core code has been made public for the new chain, and the testnet has gone live in preparation for Terra's launch. Existing Luna holders will get a Luna 2.0 airdrop to commemorate the launch of Terra. On the Terra research forum, Kwon stated that the Luna owners have been badly liquidated and diluted and that the present Terra lacks the ecology to rebuild from the ashes. Once the supply-demand ratio has been completely destroyed, the only way to resuscitate both currencies is by redistribution. When Terra was depegged from the US dollar, Kwon proposed resetting the allotment of Luna tokens to 1 billion, with 40 million of those tokens being refunded to Luna holders. It was also determined that the funds would be used to help the network expansion in the future. In this period, burning will be advantageous in reducing Terra supply and increasing demand. Terra Luna 2.0 has received support from a number of cryptocurrency exchanges. Binance and Kraken, two of the most well-known cryptocurrency exchanges, have already expressed support for the new Luna 2.0 exchange list. After the release of Luna 2.0, several additional crypto exchanges that had previously participated in the Luna delisting are now prepared to onboard the new Luna currency. After the new chain is approved, users will be able to buy the new Luna on exchanges in the near future. Most cryptocurrency exchanges that formerly offered Luna will eventually support the new chain. Under the parameters of the new Terra Luna recovery plan, existing Terra projects will be eligible to migrate to the new chain. Support for Binance Luna 2.0 is critical for Terra's future blockchain. It has the most trade volume in Luna when compared to other centralized exchanges. Binance tweeted first that they were collaborating closely with Terra on the new chain plan. Other large exchanges are still dragging their heels when it comes to the new Luna. Voyager, for example, is still indecisive about whether or not to back Luna. A Coinbase Luna listing is also doubtful because Coinbase removed Luna from its listing page. Many exchanges that now take Luna may still offer the Luna Classic in the future. The moniker Classic is most likely derived from the split between Ethereum and Ethereum Classic that happened following Ethereum's DAO hack in 2017. With Kwon declaring that the USD meltdown is Terra's DAO hack moment, it appears that this is just another attempt to market it as such. And that's all for today's video. Thanks for watching. But before you leave, is it possible that Terra Luna will ever return to its former glory? Comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye. See you in the next video.